This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on Thursday, April 17th, 2014. Our time is 8:46 Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived on Harold's websites. Two websites, HESradio.com, rarecoloreddiamonds.com. You can listen to the shows streaming there. We have a podcast through iTunes. Type in World Financial Report on Radio. You'll find the podcast there. The show is portable. We go on any of your portable devices. And Harold does daily market commentary on his websites as well. You can find it on the podcast site. Sort of an interesting week. Obviously, Good Friday, as we tape the show Thursday, Good Friday tomorrow. I know that a lot of people are taking Friday, Saturday, Sunday, and Monday off, probably about 50-50 taking Monday and 50-50 actually having to work on Monday. We had options expiry. We had the holidays, a long weekend. Geopolitical concerns continue in Russia, between Russia and, obviously, what I would consider to be a situation that people are very, very concerned about, and that is Crimea and the Ukraine. And there's negotiations going on this weekend about that. But some interesting numbers coming out this week. 86 million full-time private sector workers sustain 148 million benefit takers in the United States. Food stamp recipients outnumber women who work full-time. Also, tax revenues hit a record for the first half of 2014. People wondering why. They're trying to spin it, saying it's because the economy is getting better. Well, that's what happens when you raise taxes. You raise taxes, as U.S. President Obama has done, you're going to get more tax revenue in. But the kicker is they're still running deficits. In fact, the U.S. budget deficit for March was $37 billion. And they were quite happy that it was down to $37 billion. The U.S. deficit was basically going to be cut in half. In CBO coming out and saying that next year it will be $492 billion. But the problem is, after that, from about 2015 on, it will work its way up to $1 trillion in the years 2022 to 2024. They'll be back into the $1 trillion mark again due to all the baby boomers that are going to be retiring and using the services that they've been promised, Social Security, Medicare, and Medicaid. And people are even wondering at this point how much Obamacare is going to cost. But Harold, sort of a quiet week, but some interesting numbers off the top. And if you look at it logically, if you're a numbers person, it's just not sustainable. You can't have 86 million full-time private sector workers sustaining 148 million benefit takers. Food stamps, recipients outnumber women who work full-time. It just is not sustainable, and they're running, even with record tax revenue, they're running deficits of $500 billion. It's a serious situation in the United States.
It certainly is, and again, Wall Street closes their eyes to most of this stuff. All they want to concentrate on, is the good things, but they're missing everything that's really happening. And again, I don't put any faith whatsoever in what's happening in the U.S. markets. They're either manipulated, nobody trusts them. You've got that electronic trading that, again, is a big hassle at this particular point. Everybody's upset about it. You really can't trust the markets at this point. So basically, you've got this week, which is a very slow week. First of all, the markets are closed on Friday for Good Friday, and I want to wish everybody a very happy Easter, and all of our Jewish clients and listeners very happy Passover. So you had Passover this week. Then you have also Easter coming up. So it was a very, very slow week for traders. Most of the traders were gone, so the trading volume was fairly light. We're trading at $1,300 in gold at this point. We're down $250 on Thursday as we're trading, again, in a very lightly traded market. So we're at $1,300 even in gold. That seems to be holding at this point. But the important number is actually $1,280 and $1,170. Those are the important numbers for gold. Silver's even on the day. It did break down below the $20 level. It's sitting at $19.72. But the important numbers are really $18.80 and $18 for silver. So again, we'll see what happens with those markets coming forward. Platinum market has been all over the place this week. It's up $3 on Friday at $14.42. And you would think that with what's happening in Russia and Ukraine, that platinum and palladium would be substantially higher, because that's where most of the platinum and palladium comes from, is Russia. Palladium's even on the day, it's over 800. It's at $805. And then you've got the Dow, which has been all over the place this week. I think it was on Wednesday that the Dow opened up 100 points, then dropped 200 points, and finished 150 points higher for the day. So, again, that type of volatility is not conducive to putting your money in a market that you have any confidence in. Because, again, as we're getting older, and we're looking hopefully one day to retire, you would certainly look at safe areas in which to keep your money, because again, speculation at this point just isn't in the cards for retirees. So basically, if you're looking at keeping your money in the bank, that's just not going to happen. You're getting 1.5% or at most 2%, and with inflation and taxes being higher than that, you're actually losing money keeping your money in the bank. But unfortunately, because of the very low return of keeping your money in the bank, it forces people back into the very risky stock market. And if you're in your 50s, 60s, or 70s and you have most of your money sitting in stocks at this time, I'd be very concerned about that. Because the fact is, just like in 1999 and 2008 and 9, when these markets fall again, and that will happen very soon, the chances are you will never ever have time to make back that money again. So again, it's time to really look at these markets not through rose-colored glasses. You got to realize what's really happening in the United States at this particular point. It's still the biggest economy in the world, but as Randy read at the beginning of the show, you've got more people on food stamps than you have women in the workplace. You've got so many situations going on at this point that are detrimental to any type of growth in this country, but Wall Street just doesn't see it. That's why I don't have any money in that market at all, because again, we've seen what has happened when these markets start to fall. It's like a freight train on the loose, and in 2009, you saw the Dow go from 14,000 to 6,500. It dropped by more than 50%. Back in 1999, you saw the Dow drop substantially, but you saw the NASDAQ go from 5,000 all the way down to 1,000. Those type of moves will wipe investors out. And why anybody would want to put themselves in that type of scenario is beyond me. But again, I can certainly understand the frustration of not being able to make any money. Of, always brought up to the fact that if you invest your money wisely, one day we'll be able to retire comfortably, but that is not the case anymore, because again, you cannot trust the stock market and you cannot trust other markets, because again, there's so much manipulation going on because of the fear of what's really happening in the United States. And the United States is only one area. The other area is obviously Europe. Europe has not improved at all. We don't hear a lot about it, but the fact is that I follow it very closely, and things have not changed. You've got Greece that is still in huge trouble, Italy, Spain, Portugal. Their unemployment numbers are ghastly, and again, nothing is going to improve in those areas if there's no employment. And the fact is that you've got an entire lost generation coming, because the kids that are coming out of school, out of college, cannot get a job. They've got 65% unemployment there. So you've got the biggest economy in the world, the United States, and nobody can really trust what's happening here in the U.S. The popularity of President Obama is at an all-time low. Nobody really trusts this president. And the fact is that the markets are all over the place, and nobody can really trust what's happening in the stock market. So at this point here, the Dow's trading right at around 16,400. The NASDAQ is trading at around the 4,000 level. The market that's really on fire right now, and should go substantially higher, is the crude oil market. Crude oil is up 64 cents. We're back up to 104.50. There's no doubt in my mind that the oil market is going substantially higher, and the reason for that is you got two of the biggest oil producers in the world that are having political problems. You got Venezuela, which is a gigantic producer of oil, and then you've also got Russia, which is one of the biggest producers of oil. They also both supply China with all of their oil, and with sanctions being brought against Russia because of the Ukraine and what's happening in Venezuela, oil is definitely an area that you want to watch. As we're talking today and taping the show, crude oil is up another 64 cents at 104.40. There's no doubt in my mind that we're going to 110 in crude oil. But again, every time that market tends to get higher, you see the government tend to beat it up a little bit and bring it back down. But you've got to concentrate on the fundamentals, and the fundamentals are very, very strong for oil. So you've got two major areas that are extremely inflationary. One is the high price of oil. In fact, gas prices over the last month have increased by 30 cents, which is extreme. And then you've got food prices that are starting to skyrocket. We actually have close to 20% higher in food prices since the beginning of this year in the first quarter. So you add to the fact that people are making less and less money. The government wants you to believe that in the United States, because, tax revenues are up, that more people are working and paying more taxes. As Randy pointed out at the beginning of the show, that's a complete fallacy. That is not happening. Less people are working and people are making less money, but now we're paying much higher taxes. And that's where the additional tax revenue is coming from. So they're taxing us to death, and nobody can really trust what's happening in the financial markets here. It's a real debacle. And the fact is that we really need to be smart about what we do moving forward, because again, if you're in your 50s, 60s, or 70s, and you have most of your money sitting in paper assets, it's going to be taken away from you. There's no doubt in my mind, and many other people's mind that are brilliant in these markets, that we're heading for another financial disaster in the stock market and in the derivatives market. The derivatives market is the biggest concern of all because it's unregulated and it's in the multi-trillions, and I mean trillions of dollars, and once that market collapses, you're going to see a fiasco financially that defies description. That's why it's smart at this particular point, no matter how much money you have, to be smart about your money, not to speculate at this particular point, because speculation is only going to lead to losses. If you're speculating in commodities or stocks or anything like that and trading futures or highly leveraged positions, the chances are 90% or higher that you're going to lose part or all the money that you put into that market. So why in the world do that unless you're totally desperate and you need to make money and you're willing to gamble? At that point, you might as well get into a poker game or go to a casino. You've got equally as good a chance of making money as you do trading the stock market at this particular point. My strongest suggestions, even though the market has been disappointing as of late, is to hold physical metal, gold and silver. You don't trade that market. You don't buy and sell it, based on situations in the market where the market prices are low. When the market prices are low, if you're a believer that we're going to have high inflation and currency devaluation moving forward, then you need to own hard assets. There's just no doubt about it. It's the only asset that will do well in those particular type of scenarios. So again, even though the market is nowhere near what it should be, the fundamentals for gold and silver are extremely strong, but we know that there are powers out there that don't want to see the gold and silver markets higher at this point, because it signals that the recovery is not going as well as the government and Federal Reserve said it is. So all in all, you need to own the type of asset that you're not going to trade, that you're not going to buy and sell, that you're just going to hold. Because gold and silver and diamonds and those type of assets are buy and hold type of assets, that they're going to do well the worse and worse the economy gets. And again, unless you're seeing something that we're not, I just don't see where the economy is getting better. They put trillions and trillions and trillions of dollars back into the marketplace, into the stock market, into the bond market, into the mortgage-backed security markets, and it hasn't helped. Did it stop the bleeding? It did for a while, but it hasn't helped the situation because unemployment, which is a real reason for doing this, to get employment up, has not gotten better. Sure, there's been some jobs created, but not the type of jobs that were here back in the 90s, where people were making a good living, $200,000, $300,000, $400,000, $500,000 a year. Those same people are lucky to make $50,000 a year now. So again, when the economy was strong back in the 90s and the U.S. dollar was strong and the stock market and everything, gold was at $250. There's no need to be in gold when the economy is in great shape. But we're at $1,300 now. That's a far cry from $250. It still means that there's major issues out there. Even though the market has dropped from $1,900 to $1,300, gold is still at a very high level. And the fact is, where it could go lower, we still don't want to trade this market. You want to buy and hold it. And if the market does drop lower and you have additional capital, it's a smart move to buy more of it, because there will be a time within the foreseeable near future that we will see these markets trade back on their own volition again, and we will see new highs in gold and silver, and there is no doubt in my mind that that is going to happen. At this point here, we need to go through the trials and tribulations that we're going through at this time. There's no doubt that the U.S. government is not on board for gold and silver. They're on board for stocks and real estate. But those markets are just creeping higher. They're not doing that much better. And as everything starts to unwind, when all the dust settles, I believe we'll be looking at the Dow sitting at about the $5,600 level, and we'll see gold trading at above $2,000 and possibly as high as $5,000 or more. So, again, Randy, I cannot reiterate enough the importance of control and not getting frustrated and basically sticking with your game plan, because the game plan is sound. Own hard assets that you can hold in your possession that, again, that you're not going to trade in and out of and are not going to be emotional about. You want to buy and hold gold and silver for the long term, and you want to buy and hold diamonds for the long term. And in the second half of the show, when you see what diamond prices did at the last auction, you're going to understand exactly what we're talking about. So, Randy, that's the way I see things right now. Again, I don't trust the stock market in any way, shape, or form. Have not had money in that market for a long, long time now. And again, I've traded these markets for 35 years. And along with other people that have done similar to myself, we all believe that we're in the right market at the right time, and when all the dust settles, we will be the winners, and those in paper assets will not be.
Gold had a great 12-year run, positive returns for 12 years. We were off last year, but if you take a look at the chart we have in our free weekly newsletter, Chart of the Week, in 2014, gold has outperformed. In fact, up approximately 9% for the year. You can see that chart in our free weekly newsletter. You can get it from Worldwide Precious Metals, the company Harold recommends you use when you go to invest in gold, silver, platinum, palladium. Their website, www.pmc.com. Their telephone number, 1-866-623-2002. And we should remind you, they will be in Calgary the first week of May, conducting free information sessions about investing in hard assets, gold and silver, the physical market. Now, when Worldwide has been in Toronto or Edmonton and Calgary, these free information sessions book up very, very quickly. So if you're interested in speaking with them personally and privately about investing in hard assets, they're going to be in Calgary the first week of May, conducting free information sessions about investing in gold and silver. So speak with them at www.pmc.com. They have an outstanding website. Their telephone number, 1-866-623-2002. And when you're looking to invest in precious metals, speak with Worldwide Precious Metals of Vancouver, the only Canadian precious metals bullion dealer recommended by Harold Siegel for over 10 years. They're the experts to trust when investing within this very specialized market. Find them online, www.pmc.com, 1-866-623-2002, free of charge, obviously, the 800 number. It's easy to start your own precious metals investment account. You get an experienced, results-driven, personal bullion dealer who's there to help you maximize profit and minimize risk by building an understanding and relationship directly with you. All investments are secure and 100% insured to the full value of your investment. The metal can be stored on your behalf, all outside the banking system, or be securely delivered to your door. Discover Worldwide Precious Metals, domestic or foreign storage, in addition to premium storage options in specific coin and bar form. With Worldwide Precious Metals, you will also have instant liquidity in and out of the market with just a phone call and 24/7 online access. Connect with Worldwide Precious Metals, www.pmc.com, 1-866-623-2002, and see them when they are in Calgary. In our free weekly newsletter, and this is a must-read this week, in particular, We'll talk about diamonds a little later, but right now we want to talk about silver. And this is one article you want to get from Worldwide. James Turk saying silver skyrocketing to new all-time high. And this is a short article. We don't have time to go through it all, but it is a must-read, and it has some charts, and he is very bullish on silver. He expects silver to finally begin to outperform gold, and it will be another signal that the 3-year correction in silver prices has ended, and more importantly, that the bull market in precious metals has indeed resumed. Get that article, read the charts. Also, we've mentioned Richard Russell before. He's in his 80s. He's been writing the Dow Theory letters for well over 50 years. He has been a big advocate for gold and silver, in particular silver recently. And he has an article in our free weekly newsletter. Silver is now dirt cheap and beginning to trend up. Personally, I have been buying U.S. Silver Eagles for myself. If it can reach $21, silver will have hurdled both of its moving averages. And you can see the chart in our newsletter. Below, the gold to silver ratio, silver is now dirt cheap compared with gold. 1 ounce of gold now buys 66 ounces of silver. When the market finally loves silver, the ratio can drop to around 16 when 1 ounce of gold buys only 16 ounces of silver. My advice, as it has been, is to move to the sidelines while holding large positions in physical silver and gold, regardless of what the markets do. Silver and gold represent eternal wealth and the bid to sleep undisturbed at night. No amount of money is worth the loss of peace of mind. The power of gold opened the American West and populated Alaska. Men have spent their lives searching for gold. You can own gold by the simple action of swapping Federal Reserve notes for the yellow metal, and Richard Russell says, I advise you do that. Richard Russell is a huge advocate right now, as we've mentioned over the past month, on silver. Get our free weekly newsletter from Worldwide. Their website, www.pmc.com, 1-866-623-2002. Get the article from James Turk, why he believes silver is going higher, and read the article from Richard Russell. Harold, we have approximately 1 minute left in our first segment. But when you have somebody like Richard Russell, who has been following the Dow Jones for well over 50 years, and has been writing about it, coming out and saying the things he does, it should be a wake-up call.
It should be. And again, I have a lot of respect for Richard. He certainly has put in his time, and he's done tremendous work. I can feel the frustration, the same type of frustration that we're all feeling. Because, again, as an intelligent person, and I know, again, his background, we all tend to get upset when things don't do what they're supposed to do, and then you start looking for reasons why. And again, the market should just never trade like that. These are free markets. If you're willing to put up your money and take a calculated and an educated risk, you deserve to play in a safe market. And basically, we just don't have that at this point. With what's happening in the Dow and other markets type of thing, people should look twice about investing their money there, because again, it's difficult enough to pick the right trade. But then when you've got everything else going against you, again, you've got to look at it and say, is this really where I should be? So, again, I'm comfortable with where we're sitting in hard assets, and I do believe that over the next few years, we will certainly turn out to be correct with our prognostications.
Worldwide Precious Metals in Calgary the first week of May. Speak with them about booking a free consultation. 1-866-623-2002. Their website, www.pmc.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 17th, 2014. It's a Thursday, Good Friday tomorrow. Obviously, happy Easter to all our radio listeners. And yes, a lot of people taking 4 days off, Friday, Saturday, Sunday, and Monday. Enjoy some great food and time with your family. Our radio show runs on your favorite radio stations. The shows are archived on Harold's websites, HES Radio.com, RareColoredDiamonds.com. You can find us on a podcast through iTunes. Type in World Financial Report on Radio. Subscribe to the podcast. The shows will come in. You can listen to them at your leisure. We're portable. We're on your portable device. We go anywhere you do. And don't forget, Harold does daily market commentary on his website, and as well, you'll find it on the podcast site as well. Should mention, Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver. They are going to be in Calgary the first week of May, conducting free information sessions about investing in hard assets, gold and silver. Anytime they come to town, whether it be Toronto, Calgary, Edmonton, it's difficult to get to see them because the slots book up very quickly. So if you're interested in sitting down and having a conversation with them, book immediately. Connect with them. www.pmc.com, 1-866-623-2002 is their telephone number. Harold's website for diamonds is rarecoloreddiamonds.com. rarecoloreddiamonds.com. The website is obviously the preeminent website on the internet for investment diamonds. It's like going to a museum online. You're seeing some of the greatest diamonds posted, obviously via video and pictures in the history of the planet. And we have the featured diamond of the week. It is a 0.56 carat radiant cut, fancy, vivid, purple, pink argyle. Absolutely stunning. Take a look at it at rarecoloreddiamonds.com. Speak with Harold about investing in that market. As well, we have a great newsletter. In fact, we'll get to some of these auction results in a bit, but Christie's had a magnificent jewel sale April the 16th at Rockefeller Plaza. And just to whet your appetite, Lot 131 was an important colored diamond and diamond ring by Harry Winston. And it was a cornered, rectangular cut, fancy, intense pink diamond, weighing about 6.10 carats, flanked on either side by a tapered baguette-cut diamond mounted in platinum and 18-carat rose gold in a Harry Winston black leather box signed by H.W. for Harry Winston. Now, the estimate on this diamond was $4 to $6 million. And this money actually went to charity. The people that were selling this actually were doing it on behalf of raising money for animals. And it went for $5.76 million at auction. Just an outstanding result for a fancy, intense pink diamond. And Harold, the auction results we had a few weeks ago from Asia were great, and then we'll go through a little later some of the auction results for Christie's a few days ago. Auction results for colored diamonds continue to be very strong.
It's amazing, Randy. I look at them as they come out, and I just shake my head and a big smile on my face, and I said, this is one of the best things that we have ever done. I'm just so pleased with the way that the diamond business is developing, because it's never really been this way. I really have to say that we have to take some of the credit for the fact that we've turned the rare diamond business into an investment business. And with the advent of our auction business, H. Siegel Fine Auctions, which is the only company of its kind, I believe it's going to be one of the biggest contributions to the diamond business. But all in all, the diamond markets are on fire, and we're going to go over the auction results, and some of them are spectacular. You know, on every auction, Christie's or Sotheby's does feature an amazing diamond, a diamond that's going to sell, you know, for unbelievable prices. $5 million, $20 million, $50 million. We've seen all those. We saw a diamond a few months ago sell for $85 million. So, again, what's happening in the diamond market is really a phenomenal thing, but it makes sense, because you're talking about the rarest assets that you could possibly get, assets that never decline in value. So, you know, where most people are diversified, they do want to own assets that bring to the table, you know, certain opportunities. And in the case of rare diamonds, where they are a longer-term investment, you don't buy them and sell them in a year or two, you just won't make any money that way. These are the type of assets that you hold on for 10, 15, 20 years or more. And a lot of cases are passed down from generation to generation. And to see the type of returns that some of these diamonds do return, you know, it does take time. For example, a diamond that we owned back in 2003, a 2-carat vivid pink argyle that we bought for $350,000, is now a $4 million diamond. We have instances where diamonds that were bought 50 years ago for $50,000 are now worth $4 to $5 million. So again, those are the type of assets that we're bringing to the table. And when you look at the argyle pinks and the feature diamond, for example, you're talking the best of the very best. It may not be a 5 or a 10-carat vivid pink, but for what's available in the marketplace today, it's considered one of the larger vivid pink argyles that you could possibly get your hands on. In fact, a vivid pink argyle diamond that's over a half a carat is a true rarity, and a diamond that in 10 years from now could be worth 10 times what you pay for it today. So the fact is that what we've seen in the past, we've seen diamonds that have sold, again, for example, a $350,000 diamond 10 years ago is now worth $3.5 to $4 million. That's 10 times what the value of that diamond was 10 years ago. And if you look at any other investment out there, anything in stocks or in bonds or in real estate or anything, nothing would compare to those type of returns. And then when you look at it, am I speculating? Am I risking my money? No, these diamonds have never gone down in value, nor will they. How many 13-carat vivid blue diamonds exist in the world today? I'll tell you right now, one. It's coming up for auction very soon, and that diamond is going to sell for over $2 million a carat. 10 years ago, that diamond would have sold for $200,000 a carat. That's what's happening in the diamond market. That's an area that you want to put some of your money. You never put all of your money into one single asset. And again, the diamond market is just an amazing market to be in. Now, let me preface by saying that not all diamonds are investment quality. In fact, most diamonds aren't. Most diamonds are not investment quality. If you look at what's happening with the yellow diamond market, a yellow diamond should be flawless in order to see that 15% return that we're seeing on our diamonds. Now, when you get into larger diamonds, like 5-carat yellows, and add to the fact that they're flawless, now you're talking about diamonds that can double in 2 years' time from now. My wife has a 14-carat flawless that has tripled in price in the last 5 years. So, again, that's what the diamond market is doing at this point, and it's portable private wealth, assets that never decline in value, and where most people are looking at where to put their money at this point. When you look at, say, okay, fine, it's not easy to make money nowadays. You're not making it in the stock market. You're not making it in the real estate market. So where do people put their money? If you put your money in the bank, you're getting 1.5% or 2%. Obviously, that's not acceptable because with inflation and what you're paying in taxes, you're losing money by keeping it in the bank. And then we know what happened in Cyprus last year and what is scheduled to possibly happen in Europe and other areas this year with the banking system. So we know that we don't want to keep a lot of money sitting in the bank. It forces people into speculative investments like stocks. Most people are not suitable for the stock market anymore. It's nothing but a gambling casino. And then we find out that certain firms are able to get trades before anybody else, and it's a multi-billion-dollar scam, and that's happening in the stock market. On top of that, there are firms out there that are not very legitimate. So again, where does somebody put their money? My recommendations is to have it in different areas. Again, I'm not a big fan of the stock markets at this point because of the manipulation going on, and just the overall U.S. economy is not conducive to a strong stock market. So seeing the Dow at record prices and knowing, because I'm a Canadian living in the United States, I just sit there and shake my head. The most bearish news in the world can come out, how companies are front-running stock purchases and basically scamming everybody who's buying stocks, and then the market goes up 300 points. Go figure. It makes no sense to me whatsoever. That's why I don't put my money in those markets. But I have money long-term sitting in gold. I had money sitting in gold for 14 years now, when gold was at $250 and silver was at $4. In fact, most of my clients have that. I've invested in oil since it was $18. And we bought physical euros. I remember the day that the euro came out, and one of the top recommendations on our show was to convert Canadian dollars into euros physically and put them in your safety deposit box. And clients that did that actually doubled and tripled their money on a very, very conservative move. So that's what we're into. We're not into heavily leveraged positions. We're not into speculation. Not in this day and age. You'll lose all of your money. You need to own the type of assets that hold their value, and certain diamonds do that. In fact, certain diamonds will go up no matter what the economy is doing. Yellow flawless, argyle pinks, blue diamonds are on a tear, other pink diamonds. Don't forget, as rare as the argyle mine is, where they produce 95% of the world's pinks, how about the other 5% that are actually produced in South America and in South Africa and different parts of the world? Aren't those 5% of pinks that are left equally as valuable? So, again, I love what's happening in the diamond market right now. Our clients are doing very, very well. It's a long-term investment. Nobody I know is selling their diamonds at this point. So when we hold our auctions, and we will be having another auction coming up next month, and we'll announce it next week once we have the catalog up. But again, we bring to you amazing diamonds, but these diamonds are from my own personal collection. And the reason that I'm selling them is not because I want to, it's to develop the auction business to a much higher level. So I'm willing to sacrifice my own assets in order to build a business that we're all going to flourish from, 5 and 10 years down the road. If you own argyle pink diamonds, you'd be foolish to sell them at this point because you just defeated the real reason for buying them. You're buying them because the mine is going to close down in 6 years and there's not going to be any more pink diamonds. That's why we're buying these diamonds, and the prices can increase by 10 times what they are. That's 1,000% return. And yellow flawless diamonds in 1980 were $500 a carat. Now they're $20,000 a carat. Yes, that was a long time ago, but you went from $500 to $20,000. Who out there wouldn't want to see those type of returns? And for those of us that are in our 60s and 70s and still buying diamonds, we have children, we have grandchildren, and they will inherit these amazing assets, which will make their lives even much greater. So again, Randy, I'm just so pleased with what's happening in diamonds. We have another auction coming up. I'll announce it next week. We have some other amazing investment opportunities that are private that you can certainly contact us about, and we would love to tell you about. But the biggest returns are going to be in owning actual physical diamonds, yellow flawlesses, argyle pinks, blues, other pinks, greens, deep flawless whites. All these type of diamonds will do tremendously well for you, much better than stocks, bonds, and real estate will do at this time.
Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Speak with him personally and privately. 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Get our newsletter and see the auction results from Christie's this week. And we have the auction results from Asia. We can send those to you as well from a few weeks ago. Our featured diamond is a .56 carat, radiant cut, fancy, vivid, purple, pink argyle, absolutely stunning. And as we mentioned, Christie's, they had an auction on April the 16th in New York City, and lot 131 was a pink diamond. The estimate on it, $4 to $6 million, sold for $5.65 And the people that had that diamond, all the proceeds went to benefit animal rescue. And we have a video, and it is a must-watch video because the people from Christie's were interviewed about an auction coming up in Geneva next month. And they have a blue diamond, the largest, flawless, vivid, fancy, vivid blue diamond in the world, 13.22 carats. The estimate on it, $21 to $25 million. As well, they have the Raja diamond, which is a white diamond, once in the collection of Isabel Stewart Gardner. And it's 26.14 carats. The estimate on it, $3 to $5 million. But let's take a look at a couple of auction results that really stood out from Christie's. And this is one, Harold, that it really jarred me when I saw it. Lot 95, a colored diamond and diamond ring by Jar, set with an old mine cut fancy yellow-green diamond, weighing approximately 2.49 carats. The estimate on it was $300,000 to $500,000, it went for $1,805,000.
Loving it.
That's
Beautiful.
right. That is a real massive winner. Also, lot 211, fancy vivid yellow diamond weighing 20.34 carats. The estimate on it, $1 million, went for $1,445,000. Lot 197, and this was a square-cut, fancy, intense green diamond weighing 3.60 carats. The estimate on it, $800,000. It went for $1.2 million, $1,205,000. There was also lot 130, a rare-colored diamond and diamond ring, and that was a fancy gray-blue diamond weighing approximately 5.17 carats. The estimate on it, $800,000, went for $1,145,000. Lot 179, a fancy intense yellow diamond, and that was approximately 30.73 carats. The estimate on it, $500,000 to $700,000. It went for $1,181,000. And Harold, we have these auction results, and all of them are just simply outstanding. In fact, whether it be the yellow diamonds or the pink diamonds, a lot of them are the yellows, which obviously you advocate people invest in. Pink diamonds, yellow diamonds, blue diamonds, they're all doing well.
They are, and you know something? If you don't invest in these diamonds at this particular point, this is something that you will regret for the rest of your life, because we've been talking about them for a long time. We developed the market in these markets, and again, these prices are happening right in front of our very eyes, and again, they're happening with the most credible of companies. Christie's and Sotheby's are the two most credible auction companies in the world, and that's why at this point they get these type of diamonds to auction. What I'm hoping is to build my business over the years, to the credibility that these companies have. But again, these auction prices are not made up. They're happening. They are documented. And again, it's not necessarily the most expensive diamonds that are giving the biggest returns. In fact, the biggest returns are the lower and medium priced diamonds, which are the diamonds that we've been recommending. Most of my clients are not multimillionaires that go out and buy, a $25 million diamond. Most of my clients are hardworking families that are just tired of getting no return on their money, being forced into, again, the stock market, a risky place to put your money, and they just don't want to do that. They want a decent return, and they're hard-working people, and that's who I deal with. And again, that's why we created rarecoloreddiamonds.com and hseagullfineauctions.com to allow our clients, the everyday hardworking people, the opportunity to do well in a market that was previously reserved for the very, very wealthy. When you look at what's happened with blue diamonds over the last 10 years, it's unbelievable. And pinks are following the same course. So if we know what happened in blue, then why in the world would we want not to do the same thing in pinks? So again, prices of blue diamonds over the last 10 years have gone up 1,000%, and we're starting to see the same signs in pink diamonds. If you're in the stock market and you're having sleepless nights and you know that we're going to wake up one day and find that market plummeting, why in the world would you want to risk everything you have just to try to make a couple extra dollars in a fixed market? Take some of that market money that's at risk, put it into a vivid pink argyle diamond, and in 10 years from now, you're going to make 1,000% return on your money. Look what's happening with blue diamonds. It's unbelievable, but it's happening right in front of our very eyes. You're talking these rare diamonds are becoming more and more rare, and we bring the opportunity to you to, number one, buy them at excellent prices, but number two, have an avenue to resell them through our auction business, H. Seagull Fine Auction. So again, I'm just absolutely giddy over what's happening in the diamond market. And every time Randy does the diamond section, and this is one of the best that I've ever seen, and we see these auction results, it just brings a huge smile to my face knowing that the recommendations that we've made to our clients is the right recommendation, and over the longer term, we're going to turn out to do extremely well with these investments.
Get the auction results from Harold this week. Speak with him personally and privately at rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Harold is happy to speak with you about your financial situation, and as well educate you as to why you should have an allocation of diamonds in your portfolio. Start your own diamond portfolio today. Speak with Harold. In fact, our featured diamond of the week, you can find it at rarecoloreddiamonds.com, is a .56 carat radiant cut, fancy, vivid, purple, pink argyle. Absolutely stunning. And as Harold was touching on, we have auctions all over the world, whether it be hsfineauctions.com or Christie's or Sotheby's. We'll be happy to send you the auction results. And as mentioned, there is a blue diamond that is going to be up for auction in Geneva next month, and we will keep an eye on that auction. In fact, a pair of rhinestone earrings Marilyn Monroe wore in 1955 to a Hollywood film premiere have sold at auction for $185,000, according to Julian's. The movie, she was not in the rose tattoo, but went with Marlon Brando to the premiere. We have a picture of Marlon Brando and Marilyn Monroe together, and you can see her wearing the stunning earrings that went for $185,000. And Harold, one of the things that you have in your portfolio of diamonds in the safe, if you want to call it that, is a collection of Liz Taylor diamonds, which are world-renowned.
You bet. We have the last 8 pieces of Elizabeth Taylor's estate that are just absolutely to die for. The most beautiful pieces. 3 of them are magnificent necklaces, including her iconic one-of-a-kind ruby and diamond necklace worth over $10 million. I also have some of her brooches, and when these type of pieces go to auction, I remember last year, and I have the auction results, I'll send them to you, but what was really amazing was that pieces of her estate, of her jewelry, that were supposed to sell for $50,000 to $70,000 at auction, sold for $500,000 to $700,000. They sold for 10 times what the estimated values were, because they were Liz Taylor's and because, you know, how amazing these pieces are. So I do have some of those pieces. They are spectacular, and they are available for our clients. I also have one of the rarest blue diamonds in the world. I have a 4-carat approximately, just slightly over 4 carats, fancy, intense blue, internally flawless diamond, one of the rarest blue diamonds in the world. And I've had this diamond for a while, and it's in my portfolio, but it's something that, again, is just a diamond that you will never see again. And the longer you hold a diamond like that, the more and more it goes up in value. Again, a diamond like that eventually will be a $3 to $4 million a carat diamond. So, again, that's what the diamond business is all about. When you take a guy like Lawrence Graff, who started off as a worker in somebody else's business and turned out to be, you know, in my opinion, the king of diamonds and a multi-billionaire in the diamond business, that tells you what it's all about. And we want the same for our clients. Obviously, we're not going to turn out to be billionaires because of it, but our life is going to be much, much better because of the money that we're going to make from investing in diamonds, and it's a very safe investment. So, again, Randy, I couldn't be more pleased with what's going on at this particular time, and it's only going to get better and better.
Well, when we have this blue come up for auction, obviously it will go for a record price. And when it does, that will set the price for all blue diamonds substantially higher. Keep that in mind. If you're wanting to invest in a diamond, do it today. Speak with Harold at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. And let's give out a few more auction results from Christie's magnificent jewel sale before the end of the show here. We have lot 169, a colored diamond and diamond ring. And this was a deep brownish orangey yellow diamond weighing approximately 3.51 carats. And the estimate on it was $20,000. It went for $35,000. Also, lot 82, a pair of colored diamond and diamond ear clips, 3.29 and 3.24 carats, respectively. And the estimate on it, $35,000, went for $60,000. Get those auction results from Harold. Look them over. And Harold, with approximately 30 seconds left, we can't encourage people enough to inquire about investing in hard assets, gold, silver. Obviously, we're really advocating diamonds in this part of the show. rarecoloreddiamonds.com. And stay tuned next week when we announce our next auction.
You bet. Randy, I want to wish everybody a wonderful weekend, a very, very happy long weekend, an Easter weekend for everybody. And again, I wish everybody a very profitable day.
Thank you very much, Harold. Have a great long weekend. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. And speak with him personally and privately. 1-800-432-1022. hsfineauctions.com is the auction site. We'll have our next auction announcement, the date, on the next show. And speak with Worldwide Precious Metals. This is the company Harold recommends you use when it comes to investing in gold and silver. They're going to be in Calgary the first week of May. Meet with them. They're actually booking free information sessions as we speak. www.pmc.com, telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.